Good day, everyone. I'm Jean-Marie Claire Edra, and my co-author is Dr. Ahmed Meandahawi, and we're from De La Salle University. Our research is entitled Microeconomic Factors Impacting Profitability of Listed Industrial and Services Firms in the Philippines, an analysis. So let's start with the problem rationale. The changing business environment continues to drive the curiosity of many researchers and practitioners in investigating the different factors that may impact firm performance. Profitable companies are sources of sustainable economic growth as they provide job opportunities, foster innovation, and pay taxes. The profitability of a company describes the ability of the organization to generate revenue over a certain period. This can be examined through the company's financial statements. Using profitability ratios, the management can assess the firm's ability to generate earnings from sales, face financial downturn, and withstand the competition. A higher profit ratio is indicative of sound financial performance. An example of this ratio is the return on equity, or ROE, which reflects the company's capability to increase profits without adding new equity into the business. Now let's discuss the Philippines' industrial and services sectors. Regarding investments and competitiveness, the Philippines' economic performance falls behind its neighbors. Considering that the industrial and service sectors are amongst the Philippine economy's most vital sectors, the country can leverage these sectors to boost economic growth with its neighboring countries. However, empowering these sectors to contribute significantly to Philippines' economic progress involves addressing several constraints, including how firms belong in these sectors can increase their profitability, especially now that this is a challenge that they face with the current pandemic crisis. Now, different factors can influence the profitability of firms. Knowing these factors is essential in formulating managerial decisions that may affect the utilization of the company's resources. So this study aims to perform an analysis about the impact of firm-specific factors, namely capital structure, liquidity, sales growth, firm size, and firm age, to the ROE of industrial and services firms listed in the Philippine Stock Exchange years 2008 to 2019. In line with this, the research intends to answer the following question. Does capital structure, liquidity, sales growth, firm size, and firm age significantly affect the profitability of listed industrial and services firms in the Philippines? In line with the research problem, the study aims to identify the determinants that significantly affect ROE of firms, determine which of the factors positively or negatively affect ROE of firms, and contribute to the literature regarding the impact of microeconomic factors on profitability of Philippine industrial and services companies. For the hypothesis, it is hypothesized that capital structure, liquidity, sales growth, firm age, and firm size significantly affect the ROE of listed industrial and services firms in the Philippines. Many studies have already been conducted in this area of research, especially on developed countries. However, there is limited literature that investigated this topic and used samples from the Philippines. Hence, the contribution of this research to the existing body of knowledge is the identified impact of certain microeconomic factors on the profitability of Philippine companies. Given that a company's performance is among the most crucial research considerations in financial management, the results of this study will serve as reference for future researchers regarding the factors affecting firm profitability. It will also provide guidelines to firms, specifically those under the industrial and services sectors in the Philippines, on suitable business strategies that managers must consider to attain their company's profitability goals and help them to overcome the challenges brought by the current pandemic crisis. This study is subject to some limitations. First, the analysis of this research is mainly focused on the impact of microeconomic factors to the profitability of industrial and services companies listed in the PSE. Second, the study covered 5 selected microeconomic variables, namely capital structure, liquidity, sales growth, firm size, and firm age. Third, the data utilized in the study is secondary data, which is within the time frame of 2008 to 2019. Now, the intention of the study is to make use of the data until year 2020 to capture the effect of the current crisis. Unfortunately, most firms do not have their annual financial statements published in the databases. Hence, we were limited to using data from 2008, which captures the financial crisis that time until the most recent available data, which is 2019. Next part of the presentation is the framework of the study. Here are the theories that support the argument that the chosen microeconomic factors may significantly affect profitability of firms. For capital structure, we have the foundational theory describing the relationship between capital structure and firm value, which is the Modigliani and Miller theory, or the MM theory, and the alternative theories such as the trade-off theory and the pecking order theory. Similarly, for liquidity, we have the trade-off theory and the pecking order theory. For sales growth, we have the theory of firm growth. And then for firm size, we have the economics concept known as economies of scale. Lastly, for firm age, we have the theory of learning by doing and theory of structural inertia. To answer the research problem, a regression analysis was done. In the regression model that was formulated, ROE is the dependent variable used as proxy for measuring the performance of industrial and services firms listed in the PSE. The independent variables utilized to explain ROE are capital structure, liquidity, sales growth, firm age, and firm size. Next part of the presentation is the research method. The financial statements and company profile of industrial and services companies listed in the PSE were used for the computation of financial ratios, growth, firm size, and firm age utilized in the study. These were obtained from Reuters and PSE Electronic Disclosure Generation Technology, or PSE Edge database. Panel regression analysis was done to determine the microeconomic factors which have significant impact on the ROE of sampled Philippine industrial and services companies. And Gretel software was used in conducting all the statistical tests relevant for the study. The variables and their descriptions are given as follows. So for the dependent and independent variables, the description shows how the parameter values were calculated. For the sampling method, purposive sampling was done such that the specific criteria applied consist of industrial and services firms listed in the PSE for the years 2008 to 2019, and those firms that publish complete financial statements for the years 2008 to 2019. The final sample comprises 57 firms, 25 of which are industrial firms and 32 are services firms, with 11 years of time period after computing sales growth and 57 unbalanced cross-sectional units after computing for the natural logarithm of ROE. The total number of observations is 503. Next part of the presentation is the results and discussion. To test the relationship between microeconomic factors and firm performance, this research used the following model. The natural logarithm of ROE is equal to alpha sub I, which is the unobserved time invariant individual effect, plus capital structure, current ratio, sales growth, firm size, and firm age, multiplied with their respective beta coefficients, plus the error term denoted by epsilon. The descriptive statistics on this table show that most companies registered loss based on the average return on total equity. The capital structure shows the firm's high dependence on the availability of external financing, as the borrowed resources represent an average of approximately 263% of the equity of the firms. Disregarding extreme values, most of them are highly liquid with current assets exceeding current liabilities over 2 times. Most firms are relatively old in the industry with about 47 years of existence on average from their incorporation date. The average firm size reveals that most companies are medium-sized comparing to the minimum and maximum values registered. Next, diagnostic tests were performed on the collected data before proceeding with the regression analysis. A test of multicollinearity was conducted where invariance inflation factor of the variables was analyzed. For multiple regression to be applicable, the relationship between the independent variables should not be strong. From the findings in this table, all the variables have VIF values less than 10. Hence, multicollinearity does not exist among the independent variables. Next diagnostic test that was done was the Bruce-Pagan test to know whether it is appropriate to employ a pooled OLS or a random effects model. A low p-value counts against the null hypothesis that the pooled OLS model is adequate in favor of the random effects alternative. At 5% significance level, we reject the null hypothesis and conclude that a random effects model would be appropriate. Next, a Hausman test was done to know the appropriateness of applying a random effects model or a fixed effects model. A low p-value counts against the null hypothesis that the random effects model is consistent in favor of the fixed effects model. At 5% significance level, we reject the null hypothesis and conclude that a fixed effects model would be more appropriate than a random effects model. Next, for the regression results, T-statistics are reported based on Arellano correction for heteroscedasticity and serial correlation. The explanatory variables which significantly predicted the natural logarithm of ROE are capital structure, current ratio, sales growth, and firm age. The within R square of 0.153 means that 15.3% of the variability in the natural logarithm of ROE within company units has been explained by the independent variables chosen in this model. The remaining 84.7% is unexplained and is due to other factors not included in the model. Last part of the presentation is the findings, conclusion, and recommendations. So in this study, a panel regression analysis was done to determine the impact of microeconomic factors on firms' ROE, wherein a fixed effects model has been applied. While capital structure, liquidity, and firm age have a significant negative impact, sales growth has a significant positive impact on firm performance. Firm size, on the other hand, failed to predict ROE significantly. Hence, it is concluded that capital structure, liquidity, sales growth, and firm age are the microeconomic factors significantly impacting profitability of listed industrial and services firms in the Philippines. Now, due to the significant impact of these factors to profitability, it is essential that the listed industrial and services firms in the Philippines first, maintain an appropriate capital structure. Corporate managers need to work hard to control the risks arising from short-term or long-term liabilities and use them strategically to stimulate growth and profitability. Second, increase revenue streams. As the country continues to transform to a digital economy, firms may invest in new technologies which can reduce costs, reach more customers, and maintain competitive advantage. Third, establish an efficient liquidity management system. It might be a better idea for firms to think of non-traditional ways of liquidity management than just holding cash. And last is enhance innovation. Resist bureaucracy and launch measures to cope with the rapidly changing market conditions and boost financial efficiency. Following are the suggestions for future research. It would be interesting to examine the overall profitability of industrial and service sectors on pre-pandemic period and pandemic period to derive inferences that could be compared and highlighted. Hence, when the latest pandemic crisis data is available, a comparative analysis between the different periods may be conducted. And then to be able to generate conclusions that will apply for the whole Philippine economy and help policymakers understand how industrial and services firms could overcome challenges on increasing their profitability, especially with the current crisis. A more comprehensive set of explanatory variables or a combination of macroeconomic and microeconomic factors may be considered. So that's it for our presentation. In case you want to contact the authors for questions related to the study, you may refer to the given email addresses. Thank you everyone for listening.